Hello, ladies and gentlemen. Welcome back to another video. I hope everybody is having a great day so far. And without further ado, let's jump into today's disclaimer. We've got a big video coming up, a lot of interesting topics to hit. But first things first, this is not financial advice. Anything I say in this video is opinion and maybe educational content only. This is not to be confused with anything financial advice wise. So investing in the market's extremely risky. And with that being understood and out of the way, let's dive into today's video. So first things first, and this is something that, and we've got a couple really interesting things to cover today. Technicals wise, pretty big update for you guys. Sentiment wise, also probably the main topic of today's video. And then some really peculiar things happening in the lend pools that I think kind of tell the story of what's going on behind the scenes and if someone might be struggling. So first things first, I see these articles and I see people in my X comments lately more so than really ever before. I think now has probably been the top time I've seen a lot of negative sentiment from accounts on X. And these might be bots. They might be paid people from hedge funds. I say that partially joking. Wouldn't surprise me if they were on the payroll. Doesn't really matter though. Whoever they are, there's an army that comes in several times a year at seemingly very interesting times. The last time this happened was in April or May. And I'm going to pull up the GameStop chart here just for reference, so that we can kind of get an idea of when this happens. And this is just really something that I think is factually, the fact that it happens at these times is very interesting. It was really close to this bond offering here. Tons of negative sentiment. I think when people saw this after hours kind of scam move, 20% up off this, but from the bottom, it was a big one. It was a big time move, 40% up, huge kind of blow off top there. Richard Newton, I think, called it Cycle B event, if memory serves. That might have been back here, actually, February 14th. That was February 14th, excuse me. But this was the GameStop earnings and then immediate bond offering. And that's when you had this range here of people come out of the woodwork and say, oh my gosh, he diluted again. This is a terrible move for the company. I can't believe it. Why would he do this? It was like the same sentence over and over and over from 50 different accounts. And if you would have listened to those accounts, you missed out on a 70% move, which would totally stink. If you followed Ryan Cohen's buy-in, however, you would have caught a 70% move to the upside. And then, so in this time, the accounts kind of switched their tune to like, oh my gosh, MOAS is here and everything. Also, at an interesting time, right around here. I wonder why they would do that. When if you're being a rational person, when you see GameStops in the mid-30s, what happens? Well, it usually comes down quickly thereafter, okay, right? Big drawdowns, too, to kind of get back in this range where I have the three kind of alerts set in here. And so now, after a summer of kind of nothingness, right, for the stock, even though the company is improving their financials consistently, that's neither here nor there, apparently, you're getting the same sentiment. Oh, the warrants did nothing. Oh, you know, the company, it's stuck and the stock's not moving. Well, yeah, sure, the stock is trading a bit flat. It's been down a lot somewhat recently, and that's true. But why now would they be saying that? And I think it's very interesting. I think it's usually a coordinated campaign. I think it's something that, and I don't want to accuse anyone of paying people to do this, but I think it's definitely interesting that these headlines come out around this time. So Stockwitz, popular service, it used to be way more popular. They might be a little bit declining now in the public sphere, but either way, they come out with a headline that says, you know, retail's frustrated. The article goes into just basically show a few bot accounts, you know, that are comparing it to ASTS, a stock that ran like crazy. You know, it's kind of like, you know, just stuff that doesn't even have anything to do with the company. And yet GameStop's fundamentals are improving. Its balance sheet has vastly improved since when Roaring Kitty returned in May of 2024. And The warrants thing, I want to say in particular, if you watched my video on it, you'll know my full thoughts. But where is this narrative coming from that the warrants were going to be a ticket to a short squeeze? I mean, that's purely tin foil. The warrants, I think, are and I've said this 1,000 times, an easier to digest form of dilution. Now, you get something, the shareholder gets something for free for just having shares, essentially. I mean, technically it's not for free. You had to buy the shares eventually, whatever. But you get something in exchange for these warrants that you can choose to exercise, to which the company then would receive cash. You don't have to exercise them. You could just sell the warrants and take the free money, essentially. But nothing's free, right? Of course. So that's not necessarily a ticket to a short squeeze. Now, this is probably going to be like a situation where back here in March, the stock was, it had just run up. It had just put in a 37% run up. Right here, off the lows in early or late August to early September, 25% run up, and then gets beaten down. I can see this very same situation happening where GameStop rips right back up in the next several weeks and change. And again, this is not financial advice, but several weeks and change rips right back up. And then right around the mid 30s or $40, wherever, if it gets that high, I'm not saying it's going to. I'm not Nostradamus here with a crystal ball. I can see this happening, though, and you're going to see those accounts flip and say, this is the moment. This is MOAS. This is when GameStop's going to push the button and all these things. And they might. Ryan Cohen could do that at any time, and I think that people understand that. But more often than not, when GameStop gets above 30, 35 bucks, it kind of comes right back down. And so this whole narrative about people getting frustrated and impatient, I'm sure that could be true for some people. But I think for the large majority of people that are in this for a transformation of the business element, that's not the case. You're looking at the quarterly reports and you're saying, wow, the debt's improving. Wow, the profitability's improving. Wow, the store count's diminishing, meaning they're focusing more on the online portion of the business and profitable retail stores. Oh, and GameStop's building a cash pile because the market is probably way overbought and could eventually pull back, where GameStop is going to be well positioned with $9 billion to do something. Okay, so none of this makes any sense if you're a rational person that's thinking about investing as a concept of value, which Roaring Kitty kicked off that big, deep value investing type play way back in 2019 on this stock. The same thing is going on now. It's just that Ryan Cohen's actually doing that. He's actually creating value. So I find that thing super hilarious and ironic. And like I said, my X account replies have been flooded with these same people lately. So not wanting to call out anyone in particular, but just very coincidental. So big other news, the borrow fee on XRT, which is really the primary suspicious ETF that is connected to GameStop. We'll leave it at that today, but huge 40% increase in the borrow fee up to 3.12%. You can see that the lend pool was completely drained, and then they probably created some shares. So we'll probably see shares outstanding rise to get the borrow fee down and to get the shares available higher. Now that's a big move for cost to borrow there. For GameStop itself, it looks like some shares were returned. Again, I have no idea how it's possible that returning shares does not increase stock price. I don't get it. It seems to be correlated when they are borrowed that the stock declines, but for whatever reason, it's never reciprocated on the other side. So that's interesting. And then GMEU, which has just been all over the place lately, is up to nearly 20% on the fee. It just got off Reg Show a day or two ago. So I think that says everything that we need to know about what's going on behind the scenes. Obviously, for the 1017 OPEX, they do not want to pay out. Market makers would be very, very, very financially punished if they had to pay out some of these GameStop calls. And GameStop, the biggest one, and we'll go to the OCC dashboard here in a second, is at the $30 strike. No way, Jose, do I think GameStop's going to close there. If it does, I'd be happy to be wrong. you have 12,000 calls there, and you have 52,000 calls there. That would be insane to have over 65,000 calls go in the money. It's just not going to happen. I'm sorry to say it. It would be ridiculous. Now, if Ryan Cohen released news and wanted to blow this whole thing wide open, that would be the time to do it. But I certainly don't think that's how he's been operating, and this is not a quick get-rich ticket, obviously. As people do view it, however. Now, $25, another big call wall here. You got 23,000 calls on the GME1 strike, or on the GME1 chain, and then another huge pile, 15,000 on the regular GME chain. So you're going to see, and for those of you that don't know, the chains got split up with naming from the warrant distribution. So that's really going to be probably where I think things are going to end, probably below 25, maybe below 24.50. That, if I had to bet, that's where I would put my chips on the table. For the week after, however, and in the weeks to come, that's when I would think that you're going to see them settle some of these potential obligations that they have or they might have with outstanding fails to deliver. And secondly, the tying this back into the overarching sentiment, which again, I think is manufactured in a large degree, but if it is negative, perfect. You have all these people saying, oh my gosh, it's time to sell, time to move on to other stocks that are completely overbought. And you get bagged there. I think that's when you're going to see ascension, and it's pretty much worked like clockwork. Again, it's, if you're looking at technicals, if you're looking at, the mechanics like the Len pool and fails to deliver, which we can talk about soon too, that's when I think you're going to see that this indicator of the fear, uncertainty, and doubt kicking up, that's usually the number one sign over anything else, in my opinion only. That being said, let's take a look at the fails. And this is absolutely nuts. You can see right on the graph here, this is XRT fails, one of the highest ever days over the last 2, 3, 4 years and change. They had 126 million notional fails, $126 million worth of fails on September 15th. Okay, that's 1.4 million shares of XRT. What is interesting about that is that sometimes the shares outstanding for XRT dip as low as 2-point-something million shares. So if we go to our handy dandy sheet here that is being updated by a user on Reddit, let's look at the ETF model and see what XRT's shares were on September 17th. So they were So on the 15th, 3.94. Wow. So they failed so I'm doing this live for the first time. 1.4 million. They failed nearly half of XRT's outstanding on that day. That is absurd. And then, of course, the next day in magic la pretend land, they claimed to close those out, which again, if you know anything about continuous net settlement and special trades being marked, they're not closing these out. Yeah, in my opinion, which is backed up by cold, hard fact literature. GameStop itself, increasing fails. So let's just look at broader view here. Let's look at the chart. Look when Roaring Kitty came back, which is in this area here, early May 2024, you're getting consistent fails, right? Look at it now. You're getting consistent fails with huge fails on the second bond offering, by the way. Doesn't look like any price action would have had those closed out by now, but neither here nor there again. And then GMEU, again, this thing is, I've coined it as a reg show machine. You can call it a disaster. You can call it a scam product. I think all of those things might be above board, but you can see very strategic periodic fails in very peculiar bunches. So do we have 3 swaps here? Maybe. Then this is the bond offering, okay? So there's clearly a theme to this that indicates something's happening. Now, I did want to also talk about IWM, which for everyone that is critical of these theories or whatever you want to call them, the first thing they're going to say is IWM does not hold GME, and it no longer does. But it did previously. So can fails to deliver still be cycled through, legacy fails to deliver still be cycled through IWM? Maybe. And I do find it also interesting that on the day that Roaring Kitty dumped his Chewy position, that you had an insane amount of fails on IWM, 5.51 million. Okay, so something is cooking here, and I don't think we've even scratched the surface of it yet. So on September 22, right around all those XRT fails, and on September 17, right around all those XRT fails, you had $1 billion worth of fails on IWM. $1 billion. 5.3 million shares of IWM are failed. A couple days later, 3.69 million shares of IWM are filled for $902 million. That is absolutely insane. Something clearly is going on here. Whether you want to think it's connected to GameStop or not, you can be the judge of that. I like to use the kind of overarching view of what's going on here. And if you just look at a couple things. One, what's GameStop doing? Well, it's trading flat. It's down 20% since early October, right? Which has scared people away somehow, or changed the sentiment, let me say rather. I don't think that's a big drawdown, by the way, for a stock like this. Let me put that on the table too. You're looking at a company that its leadership is improving the business. You can't dispute that. It's just factual now. So you have that. You have what's going on with the ETFs that contain GameStop or have synthetic exposure to GameStop. They're being blown up to a point where we've never seen, ever, dating back to 2021. Never seen consistent stretches like this of the ETFs being blown up. You have that. Very interesting. You have the fails to deliver popping up consistently with the Len pools flashing signs of extreme shorting, extreme borrowing, extreme trying to clean up fails. Those are three pieces of a puzzle that is very interesting. And we haven't even really included swaps on that puzzle board yet because they're extremely hard to dig into. I think that really says it all. I think that that's pretty much the topic of today's video, that it's just odd. The timing of these things, the sentiment of these things, and technical wise, I always like to kind of update things. Not that a lot's changed here since yesterday's video, but Altimator's bottom finder is just going banana lands here. Last time it did that was in March around the bond offerings, and we all know what transpired a month or two after that. You got a 73% run up. So if that were the case now, you would be, and this is just if history rhymes, you would be around $40. So we'll see. My personal prediction, I think we get high 30s before some kind of corporate action where Ryan Cohen continues to raise capital for the rainy day of the Black Swan event in the market. That is my personal kind of thesis before very green pastures in mid-2026. That would be my thought, which is not financial advice. But I hope you guys are enjoying this content. Please leave some likes. Let's get some comments going. What do you think is going on? Do you think this is coordinated? Why is it on GameStop? And could it be on GameStop because GameStop is really just a name that is really a much bigger entity of the entire financial system? Could it be that big? Or could it be, hey, there's a certain bank, whether it's a Swiss bank or a Japanese-based bank that's at risk of blowing up over a legacy GameStop position? Could it be that? Or could it just be that, yeah, hey, people really are burning out on Ryan Cohen and the dilution and the stock not moving? Who knows? Let me know your thoughts, though, guys. I appreciate you watching today's video. I hope everyone has a good day, and I'll talk to you again real soon.